Welcome to the Caffeinated Contractor. If you're a fan of home improvement shows like House Hunters, Renovation, you're in for a treat. Joining me today is the incredible Stephanie Drewry of CNT Mortgage. Together, we're going to be diving into the world of home loan options that not only cover your primary residence, but also include fantastic renovation possibilities. So let's welcome Stephanie Drewry. All right, here we are with Stephanie Drewry from CNT Mortgage. Stephanie's a friend of mine. We met at BNI here in Cypress, Texas. And if you want somebody who does your loan, who is on top of their game, who's constantly learning and understanding the market, Stephanie is your person, your go-to person. So, but Stephanie, welcome to the show, and tell us a little bit about yourself and CNT Mortgage.
Awesome. Thanks for inviting me. Love your podcast. You're doing awesome, by the way. So
Thanks.
Yeah, a little bit about me. I'm born and raised from Houston, Texas, and I got into the mortgage industry back in 2016. I migrated from real estate, jumped into real estate for a little bit, and just really fell in love with the mortgage side of things. Kind of grew up in the mortgage family. My cousin's been with CNT for, 22 years now. And just one of those industries where I said, no way, not for me. I would never do that. Until I fell in love with it. So nice. I started at a different mortgage company in 2016, and I just realized the shift that I wanted my business to go in terms of product knowledge, guideline knowledge, and not just sell like a call center type place. And CNT is a small family brokerage, stands for Carrie and Tammy, the CNT, and they met back in junior high, and they got in the mortgage industry together roughly 2001, I think. And during the crisis, they decided to go out on their own, and they opened CNT Mortgage in Carrie's house. Wow. And we've just grown from there. And so we really pride ourselves on, I know a lot of people say it, customer service, but we really do. It's not a sexy industry, so to speak. Not everybody's too excited to talk to us and divulge all that information, but it's our job to make you feel comfortable. It's our job to educate you and guide you and ask you questions to see what's important for you. And once we get an idea of what's important to you, that's really where we dive deep and figure out, hey, I know you said you want to get approved for this program, but based on what you're telling me, let's take a look at this one and you can compare. Yeah. And so that's really something that we pride ourselves on at CNT Mortgage. And of course, we do have very competitive pricing and stuff like that. I don't get into it too much, but my favorite part is just the customer service and just that family atmosphere at CNT. Yeah,
it's funny. Like, there's so many companies out there that have that in their core values and stuff, but it's really just words to some, But I could just tell just from BNI and our interactions, and you've met with my wife and talked to her about different things. So I could tell that is part of the culture at CNT. So it's really cool to see. And I could see that through you. So I know you all handle various types of home loans, and you can probably talk for about a week about each one. But today we want to talk specifically about a loan product that helps people with purchasing a primary residence and doing some renovations. And that's a FHA 203K loan. And can you kind of like high level just kind of tell us what that is?
Yeah. So an FHA loan is really an FHA product, your typical FHA product that you see every day, with the benefit of simply rolling the cost of different renovations, repairs that you want into the product. And the good thing about this is, especially in today's environment and the cost of everything, it keeps you from taking out a credit card with high interest. It allows you, it's a single closed loan. So you take the repairs into the renovation and finance it into the loan amount. And it keeps buyers from coming out of pocket, liquidating savings, taking out a construction loan, and having to refinance later on down the road.
Yeah, that's excellent. Yeah, I wish I knew about this program when I bought my third house. We certainly could have used it, right? But, I know it now in case we have another desire to move, which we don't. So,
And I can think of some homes that have been sitting on the market right now that this product will definitely benefit them. So that's why I'm really excited to do this.
Yeah, absolutely. And that's the thing too, that Linda and I were looking at some of these homes like, gosh, it's a fixer upper. Nobody's looking at it. It's been on the market for a while. Like this is a perfect opportunity for someone. But the thing is, I don't think this 203K loan is very well known. I think it's one of those hidden secrets that people really should kind of dive into.
Two things. I think you nailed it. It's not super well known. And to those that it is well known, it's got some bad stigma behind it. And we'll cover that.
Okay, excellent. So I know there's two different kinds. I only know this because you told me. So what are the two different kinds of 203K loans?
So there's two types. You'll hear limited and standard. Sometimes you'll hear streamlined instead of standard. The ones that most buyers gravitate to is the standard, simply because there's no cap on the amount of repairs when you finance, as long as you stay within county loan limits per FHA guidelines. There is a minimum of $5,000 in repairs. So as long as you're $5,000 and above, you'll be able to qualify for the standard. It's more open in terms of repairs and what can be done, and we'll cover that throughout this podcast as well. The limited, I guess the best way to describe the limited is more of your cosmetic basic repairs. So there is no minimum. So that's kind of the difference. And then there is a max. There's a $35,000 max. And really, you got to think about it a little bit less than $35,000 because you have to factor in your contingency fees and other fees that you're rolling into it as well. So a little bit less than $35,000.
So the contingency would be what, 10%?
10% is usually the recommended amount, the required amount.
So 3,500 of that limited would be towards contingency.
Correct.
Okay, that makes sense. All right, so we talked about the cost of improvements for the two different kinds. So the process, and I'm sure this is probably a rabbit hole we can get down to, but maybe the process for a 203K loan compared to a traditional loan for the borrower. What is there a difference in the process?
The biggest difference between the limited and standard when it comes to the process for the borrower, a HUD consultant is going to be required for a standard as opposed for a limited. And so the HUD consultant is going to go out to the property with the buyer. They're going to draw up the work write-up and everything like that, as opposed to the limited. And it makes sense. You're doing less with the limited. You're getting less repairs, less work done. You're not dealing with structural when it comes to limited or anything like that. So that's really the biggest difference that you see between the two.
Okay. Excellent. And so with the HUD inspection and things like that, does this increase the time of escrow? Let's say in a traditional one, you can close in 30, 60 days maybe. Does this prolong the escrow period?
Yes and no. So it's been a while since I've done one of these, especially with the market that we've been in. Sellers want to close quick. So a lot of them don't even entertain. If they've got a conventional or a typical FHA offer up against a renovation offer, they're like, oh, no, we're not going to close quickly. But yeah, so as long as you have a good contractor set in place, which you want to think of ahead of time when you're kind of thinking about this product, and a HUD consultant, usually they're pretty quick as well. As long as you have that foundation of this process set in place, it should go pretty quickly. The one that I did not too long ago, we were about 47 days, and that's simply because we were waiting for the contract. We didn't hear from the contractor for about a week and a half.
Oh, goodness.
And that causes a delay.
Yeah, that's a problem. So that, if you work with elevation construction, you won't have that problem.
Exactly.
We pride ourselves in communication. So yeah. All right, cool. So, we were talking about this question earlier, but the basic requirements, FHA requirements for the borrower for this particular loan product?
Yeah. So, just like I mentioned when we started this, is you're looking at as low as 580 credit score. Some lenders will go lower. As at CNT Mortgage, we typically cap it out at 580, and that's just the way that we do things at CNT Mortgage. And you're still looking at the 3.5% down payment, and it's based on the sales price plus repairs. So easy math.
Okay.
If the sales price is $100,000 and repairs are $50,000, obviously we're looking at the standard. In this case, you're taking 3.5% of that $150,000.
Got it.
That's what you're putting down. And that's typically, and you get a higher debt to income ratio with FHA as opposed to a conventional product as well. Those are the basic requirements for the borrower.
Okay. All right. So say someone is qualified, within those guidelines, and they want to pursue this. What kind of properties could they use a 203K loan on?
Your traditional, so single family residence, PUD, so if an NHOA, and then condo, FHA approved condos as well.
Okay.
And it's primary residence only. I think that's I've heard a lot of people wanting to do a 203 FHA product for an investment, and that's not the case. Also, 2 to 4 units are you can utilize this product for 2 to 4
Oh, you
units.
can use it up to four units, huh? Oh,
Yep.
that's cool.
Yeah.
Wow. That opens up a lot of possibilities. What about, I've read somewhere, I think it was in your notes, that it has to had been built over a year ago or something like that?
Yeah.
Okay.
So the best way to think about that is if you're driving around and you see that somebody started a home and never finished it, 8 months ago, that's not going to qualify for
Got it.
an FHA 203K.
But maybe someone who tried to flip a house and they're in the middle of it and they just like, I can't do this anymore, but that would qualify for an FHA?
As long as it's been yes and no.
Okay.
Yes and no. And it's a pretty complex answer.
Yeah, sorry, I didn't prepare you for that one.
That's okay. Okay. When it comes to flipping, FHA guidelines, it's had taken place 91 days prior. So that's why it gets a little bit sticky.
Okay.
So if somebody just flipped a home and you wanted they didn't do all the work that you wanted done, say there was still some cosmetic things that needed to be done. If it was just flipped last week, it's not going to be eligible.
Oh, okay. Makes sense. All right. That's good info. Okay, cool. All right. So we got two different types of loan products, 203K standard and limited. And so some examples of improvements that you can use on a standard.
Yeah. So kind of what I was going back to, well, for a standard, let me get into the limited first. So the limited is more of your basic cosmetic repairs, kitchen, bathrooms, replacement of windows, doors, anything cosmetic, paint, stuff like that. Also, appliances can be financed into the loan amount too. I just thought that was a pretty cool fun fact. Standard is the same eligible repairs as limited. It takes it a step further. So you're able to, if there's anything structural that needs to be improved or added on or anything like that, you're able to utilize a standard for that. Okay,
cool. And then I saw that there's a long list of like ineligible type projects, improvements for each one. So just with some examples for ineligible for the limited.
Anything luxury. That I get a lot of people that ask questions about 203 products and they're like, I want to finance a pool. I want to add a big, awesome kitchen into the backyard. So anything luxury is going to be a no-go for these products. This product is geared towards getting that house the way the buyer wants within limits.
Got it. Could you do those luxury on the standard?
No.
Okay. So no luxury stuff.
The luxury is a no-go for both. So barbecue pits, barbecue outdoor kitchens, all that.
What about home additions? If you want to turn a 2-bedroom into a 3-bedroom, could that be rolled into a standard?
Into a standard, no. You can't add any dwelling units. Now, what you can do, you can add an ADU, an accessory dwelling unit, like to the back of the house or on top of the garage or anything like that. That's okay to do.
Interesting. Okay. So you can do that. All right, got it. Okay, so I'm kind of getting ahead. So for before you start all the projects and all that, you're still in escrow period. Typically, my wife and I bought a few houses. We know during that period you get a home inspection. I know the HUD what's he called? Consultant would go out and take a look at it. Do you also get a home inspection with this?
It's up to you, the buyer, and I always, always, always recommend it. Even though we know, say, Chris went in and remodeled this home and added this and fixed this and repaired this, it's always in the buyer's best interest to get a home inspection. Yeah,
I totally agree with that. There's a few projects that we tackled a couple of years ago where we actually were able to use the home inspection to come up with we know that the subfloor in the bathroom was damp. So we knew that there was an issue with the subfloor before we even jumped on that. And the home inspector pointed that out. So we were able to include replacing the subfloor in the bathroom to our estimate based on that home inspection. So the home inspection is a good tool to give to your contractors, give them a good sense of the integrity of the house. So is the roof good, or is the siding good, or the windows good? If the outer shell is good, that's cool. Okay, we just leave that alone. Let's focus on the inside. So I highly recommend home inspections, even though when we just bought this house a year ago, we didn't get a home inspection.
You didn't?
My wife, no, we didn't. It's a sore subject between my wife and me.
Okay,
what's that?
Okay, we'll leave it there. I said, we'll leave it there.
No, she, that was part of our, the offer.
I figured.
And we could have still gotten one, just we couldn't really negotiate based on it, But, it's a fairly new home. So Anyway, different topic for a different show, right?
Yeah. Good bones. That's what matters.
Yeah, exactly. All right. So home inspection, definitely want to get one. You got your HUD consultant will go out there and take a look as well. At this time too, you really want to have a contractor that you have identified perhaps, or actually interviewing a few during this process, right?
Nope. Absolutely. Okay. And to touch on that, when it comes, because I always get, how do I know which contractor to use? How do I know that they're going to do the best work? And I really break it down to, it's like a job interview. Interview a few, call their references, check their websites, look up their work, and don't be scared to get into their business, because they're the ones that are coming out to work on your home.
Right. Yeah. I would say, check out their social media for, just before and after, but are they also taking the time to educate the consumer, right? Are they sharing information? Are they somebody that you think that, you know what, I want them on my team, because they are a part of your team. So you definitely want to, check out their social media presence, their reviews, their websites. You can even, if they have projects in progress, say, hey, can I go take a look at one of your projects and see what you guys are doing? That's always good. And references, of course, references are always good. So that would be a good rule of thumb when you're looking for a contractor. Prior to closing, what extra tasks need to be done in closing for this loan compared to your just regular traditional home loan?
So it's done the exact same way. Obviously the extra tasks that need to be done. Sorry, brain fart. The extra steps that take place is just definitely nailing down the contractor. That's the biggest nuts and bolts of this product, is nailing down the contractor, getting those bids in, and the lender will send you the contractor, different forms that need to be completed and everything like that. And the HUD consultant, I've never had an issue with the HUD consultant. And just once we get those bids finalized, the home's appraised based on the bids from the contractor. So that's how we get the as completed value. And then once everything's in, just like a traditional FHA loan, once everything's in and we upload for that final review and get that clear to close, then we're closing. And then work starts required 30 days after closing is the minimum, up to 6 months.
Okay.
To complete the jobs.
So they have to wait 30 days, or can they just start like on day one after it closes?
They can start day one. I just meant you have 30 days to start.
Gotcha.
If work hasn't started within 30 days, that's an issue.
Wow, gosh. If you had to wait 30 days for work to get started, that'd be a bit frustrating, I would think.
Oh, so that's not the norm?
Maybe for some, and not us. We're like, let's get to work. Let's get this going. So
good.
Yeah. So that's crazy. If you got a job, jump on it. Anyway.
And that's not to cut you off. That's a big myth that we hear when, asking buyers, hey, why not this product, or trying to talk to listing agents about this product is, well, we have to wait till all the work's done until we can close. And that's just not the case. Work does not start until after you close. So you, the realtor, we close and fund and you get paid.
Yeah, I think you and I were talking about it last week, because I was like, I can't remember who I was talking to. Yeah, it just doesn't make sense, right? Why would you do construction when you don't own it?
Yeah,
exactly. It just doesn't make sense. So yeah, construction starts after you close. So,
and one thing to notate too, this is different when it comes to Texas. There's no self-help in Texas. So say, Chris, you wanted to buy a new primary home and utilize this product and do the construction yourself, you wouldn't be able to. Other states are different. So
self-help is, of course, I'm not going to swing hammers, but what if I know an electrician, he'll do this. I know a plumber, he'll do that. Like, can they do the GCing without actually putting their hands on the house, or is that considered self-help as well?
As long as they've been approved, they can do the help. As long as you yourself, the buyer, are not putting in the work or putting in the sweat equity into the property, that's the no-go. But if the GCs have been approved, you're fine on that.
Gotcha. Okay,
and there's only one general contract for standard and 3 are allowed for limited.
That's right.
So it's definitely different.
All right. So you can't really, ideally, with those guidelines, it's be challenging, probably impossible to GC your own project. I wouldn't recommend it. Plus, there's no value in it. You don't get paid for it. So have someone else do it. Call me. We'll do it.
All elevation control.
So So what about the appraisal, right? So I know appraisal comes in, you put in an offer, it has to appraise at what you're offering or above, ideally. So what happens here? Because it's not in a good condition, it's going to appraise lower than the purchase price plus construction, right? So how does that work?
So the buyer's getting the home appraised once we have the bid from you, the contractor. So they're appraising it projected based on based on the repairs that are going to take place. And
so it's going to be the after repair value type thing. Okay, that makes sense. That's fair. That's fair. Okay, cool. All right, cool. So we covered the myth that you brought up. That's kind of funny, but I can kind of see why people feel that way or see that way. Mm-hmm. We talked about when they should start looking for a contractor. It's sooner rather than later. Asked about GCing their projects. Sorry, I'm going through my questions here. We already hit a lot of them.
I'm browsing them too.
So, what should the borrower know with regard to selecting a contractor? We covered some of that already, or maybe we covered all of it.
Yeah, and I was just going to really go back to that. It really is a job interview when you're entertaining a contractor or doing these repairs or renovations to your property. Just really, really do your research. I'm more than happy to give recommendations. Don't put that all on me, though.
Yeah, exactly.
I'm going to let you know who I would refer my own friends and family to.
Right. Mm-hmm. Yeah. At the end of the day, it's your decision, and you got to own it. But at the same time, when you're talking to the contractors, be upfront and let them know the type of loan that you're using, because that does affect, depending on which one they get, the standard or the limited, how they get paid. There's also extra paperwork that goes along with it. It's some contractors are not willing to go through that. Just
or don't have the requirements needed to be approved.
Exactly. Mm-hmm. Exactly. So let's see here. What would the contractor need in order to get approved to work on their project?
Yeah, so I'm going to read it straight from FHA guidelines.
Yeah, perfect.
So the borrower, like I said, can choose the contractor. They need to be licensed, bonded, insured up to $1 million. We'll have a profile report. It's going to have to demonstrate the experience level. They really look for a minimum of 3 years, and projects done within the last 12 months is a big one. Financial ability to sustain products. The lender reserves the right to pull a background check on a contractor, and I don't hate that. I definitely understand that. I've had some kickback on that before, and if your contractor is giving you kickback, just kind of sit back and think about maybe why.
It's a red flag.
And then just kind of like I had mentioned, borrower is allowed, the buyer is allowed up to 3 subcontractors on limited and just 1 general contractor on the standard.
So for the general contractor, I can have more than 3 subs. Like I can have an HVAC, plumber, electrician, carpenter, right? Like that. There's no specific requirement or limitations on that.
I believe so. That's something I want to double check for you.
Yeah. Okay.
Before
I would imagine though that if it's coming through the GC is like, hey, I'm putting my name on this. I got my guys, right? If it's got HVAC, electrical, and plumbing, those are 3 different disciplines, and they're not going to do flooring and drywall and things like that. So I would imagine that's the case. Let's see here. So there's 2 different, you got the limited and the standard, and both have different payment methods for the contractor. You want to start with the limited first?
Yeah, we'll start with the limited. So you can have up to 50% of those funds dispersed at closing, and the next 50% will take place after the work is done, and it's going to, pictures of proof will need to be shown to show that. And then for the standard, you get up to 5 draws, and actually the HUD consultant determines the draws. Okay. Mm-hmm. All right. So the contractor needs to have a good relationship with the HUD consultant, make sure they're getting along well. For the limited, is that 50% of material and labor of the entire project? Yes. Yes. Okay. Yes. And then I read in the standard that the draw, you can get something up front for the draw, but only on material. Yep. So labor, the contractor would have to be able to float that until the draw comes to cover that. Is that accurate? Yes. Okay. So you have to have a contractor who's willing to do that. Not many are. Is that the case? Do you see a lot of contractors not okay with that?
Well, when they have like the limited, the way they pay out for labor and material, 50%, I mean, that's ideal, right? Because you want to have that money to, let's just say the particular, before you do the draw inspection, you have 2 weeks, right? And in that 2 weeks, you have to pay your labor at week one, at the end of week one. So the contractor would have to have money in reserve to cover that, because all the money they used was towards material, right? And they don't get reimbursed for that, payroll until the first draw comes. Does that make sense?
Yes, it does.
So, I mean, my, elevation, we've done like, I don't know, probably $6 million worth of bank draws over the last several years. And, it hasn't been easy for sure. It's not easy. It's a pain, but we've been able to do it. And through the whole, going through the painful process of waiting for draws and inspections, and we've learned a thing or two and put some processes in place of like, okay, if this were to happen again, we got this, right? So you definitely want to have a contractor who's got the experience dealing with bank draws, maybe not specifically the 203K, but bank draws and dealing with things like that. It's going to be very beneficial if they have that experience.
Okay.
In my opinion. I'm only saying that because I've got that experience, of course. So, all right. Let's see, where are we at? Okay, so we talked about the projects, different payments, how they get paid, the bank draws. So change orders. Now, nobody likes change orders. I don't like change orders. The way we tell people that during our projects, if there's a change order, it's because you changed the scope of work on us. Mm-hmm. We opened up a wall and found something that we weren't expecting, or we pulled up some flooring and found something that we were not expecting. Or maybe there is the city came in and just said, oh, you need to do this now. And like, well, we weren't expecting that, and it's not part of the code. So those are the only times we would see a change order, but they do happen, of course. In this particular instance for 203K loans, how does that work?
So basically, we'll send you the form, the change order form. You're going to notate the reasoning behind it, and then we're going to submit that, and it's got to be approved first. So no change order is done until it's approved through the lender. And it's really as simple as that.
Okay.
Your change orders are your least favorite phone call.
Yeah, I know. I hate those. It's so bad. Like, I just don't like those conversations, right?
Yeah. They're hard. They're hard to have, but it's the reality of it too. And so like you at Elevation Construction, you set that expectation up front. Hey, this could happen.
Yeah.
It's not a phone call I like to make, but I'm going to be upfront with you.
Exactly. And, for people who watch like the Chip and Joanne show, Fixer Upper, and when they have to call like, oh, this came up and now it's going to cost an extra $3,000, and they're just dreading that phone call. Mm-hmm. So that conversation between Chip and Joanne are conversations that I'm having with my team, and I'm like, I don't want to make this phone call, but it has to get done in order to go forward with the project. So.
And I mean, it's the reality of construction or renovation. Yeah. I mean, you have to have that mindset of, I'm different. If I'm going to do this, I'm going to prepare myself for the worst. Mm-hmm. That way, if it doesn't happen the way I want, at least I'm not let down or have that extra stress.
Yeah. And that's what the contingency is for things like this. Is that correct?
Exactly.
Okay.
Yep.
What happens if you don't tap into the contingency? Could you use that for anything else, or is it just?
Great question. It can come off the principal.
Okay. Yep. Well, that's cool.
Yep.
So there's benefits to that. Okay.
There is.
Very good. I like that. What have we not hit anything on this loan, that might be beneficial to the listener?
What's so funny is when you sent me over your notes, they were pretty much identical to what I wanted to cover.
Oh, good.
I really think that we covered the nuts and bolts. It's really not a product that needs to be taken and become this big, gigantic cluster of, this is a terrible product. There's too many things that need to be done. There's too many processes. As long as you've got that contractor set in place, and those bids are coming in based on the requirements from FHA, it's really not that bad of a product. Now, I'm not sitting here saying it's perfect every single time. I'm just saying, as long as you have the right team, as with anything, it'll go pretty smoothly. And so when I'm setting the expectation of close date, it's got to go on the contract, and sellers are going to typically want to close as soon as possible. I'm really setting that expectation to give me 45 days. But if we've got a good, solid contractor, I really think that we can do it sooner. Typically, you're going to hear the expectation of 60 to 90 days on these.
Okay. Okay, cool. Excellent. Okay, so outside of 203K stuff and just generally the current market the way it is right now, I have a question. What message do you have for anyone thinking of buying now but are putting on a pause on it due to the market?
They need to understand there's about 3 million home buyers doing the same thing that you're doing. So they're putting you've got about 3 million pre-approved home buyers waiting for the market to shift, waiting for these rates to come down. So what do you think is going to happen? Even just the slightest shift in rates. We've seen rates come down, and I mean, the applications coming in and the phone calls coming in is insane. So I'm really preparing buyers who are, I want to do this later on. I really want to wait for rates to drop. Absolutely. I would too. But think about this, that $400,000 home, which is pretty much the average sales price right now today at a 6.75% interest rate. It's not a rate quote, just kind of the base of what I'm seeing right now. I'd rather pay that on a $400,000 home as opposed to $450,000, $475,000, because that's really what you're going to see. And it comes back to supply and demand. I think that's what a lot of consumers these days don't understand, or they're overthinking the real estate market, and it really is supply and demand.
Yeah, I get it too. I mean, if you just kind of look at the rates, yeah, it's a little scary, right? I'm just glad we got the rate we did a year and a half ago. But, to your point, if people are waiting on the sidelines and then all of a sudden they start entering the market, that $400,000 home is going to get multiple offers, and they're going to get offers above asking, and it's just going to go crazy again.
And they're going to get in a situation like you, where to get their offer accepted, they're going to have to waive their home inspection. They're going to have to put in an extra $10,000, $15,000 bid over asking, like you said.
Yeah.
And it's not fun.
Yeah. Yeah, it's not. It's
very stressful.
Yeah, it is.
For a living. So for us to say that it's stressful, it's pretty stressful.
Yeah, a seller's market is very stressful for a buyer. I've been through a few of them, and I hated it.
We got in right before. So we bought this house in March of 2020. And the amount that we bought it for versus what we could today, I mean, we wouldn't be able to afford it.
Same here.
And that just goes to show you how much the market's changed in the last few years. When it will balance out, I don't know.
Yeah.
If I knew that, I wouldn't have this conversation with you today.
Exactly.
I'd be retired.
My thought is, if you have a desire to buy a house, don't let the rates dictate your decision. There's a desire there for a reason.
Talk to a professional. If you're questioning the numbers or anything like that, just talk to a lender that you trust. Talk to a couple different lenders and really just get your feel for what the numbers look like, what they look like now, what they could potentially look like, and make your decision based on that. Exactly.
That's perfect. So Stephanie, how could somebody reach you? What's the best way? Email? How can they contact you if they want to talk to you more about either 203K loan or any other loan that's out there?
Awesome. Great. Thanks for asking that. My cell number is 713-628-5864. I don't mind giving that out. I know that you buyers have a very stressful schedule, so I try to be as flexible as possible. And then my email is stephanie@cntmtg.com, and I'm pretty much available all the time, at reasonable time, but I try to be as flexible as possible. Excellent.
Well, very good. And I've got one last question. It's probably the most important one.
Let's hear it.
Do you drink coffee or tea?
I'm a coffee drinker, Chris.
All right, cool. All right. I hold that question for the end because if someone says tea, I might be tempted to just okay, thanks for showing up.
You won't be able to focus on the entire...
Yeah, it's like I'm distracted. I'm like, how can I be talking to a tea drinker right now? This is coffee.
I'm not against tea, but I prefer coffee any day.
Yes, I agree. I am for the tea party and everything about that or surrounding tea. But I'll just leave it at that. Okay. That's where... I like tea in the Boston Harbor. That's where I like my tea.
I need to travel more.
Yeah. All right. Anything else, Stephanie, before we close out?
Not really. I really appreciate you having me and educating people on this product, because it's a good product when it's used right.
I agree. I think if more people knew about it, it would be very popular. So maybe we can get the word out to more people.
Absolutely. And there's other renovation products for different loan types too. So I think we should probably plan on a series for the conventional BA renovation product.
Let's do it. I like it. That way you give everyone some options.
Yeah, let me get some more coffee in my system.
Excellent.
Thanks for having me.
All right, Stephanie, I appreciate it.